Welcome to Come Learn Forex. In this video, we'll be having a look at order types. Please read the following disclaimer carefully by pausing the video before moving on. So let's get on to it. We will look at what is an order and what are the different types of orders in the Forex market. So let's look at what is an order. An order refers to a set of predefined instructions given to a broker in order to buy or sell any chosen asset on a trader's behalf. There are multiple types of orders and are all used for different purposes. We will further look into these within the following few minutes of the video. A fill is when an order is completed or also called filled. This is when a buyer matches up with a seller, or vice versa. It is an important concept to grasp as it is the foundation of how orders work. Now let's delve into what types of orders there are. A trade order can be an active or a passive order, as there are active and passive buyers and sellers. The active ones are the market execution orders, which means that the buyer wants to buy right now at the best available price. In respective opposition, it would mean that a seller would want to sell right now at the highest or the best price that a buyer is willing to pay. A passive order in the Forex market most commonly is either a limit or a stop order. Further to that, there are GTC, IOC, AON, and FOK orders, which we will explore in a bit. Now let's look into market execution orders. They instruct the brokerage to complete the order at the best available price, as already mentioned. Therefore, if one is selling, this means he will sell to the buyer who is willing to pay the most right now. Vice versa, if one is buying, this means he will buy from the seller who is willing to ask for the least amount of price. In the example above, this means that the seller is willing to get rid of his asset right now at the best available price, which is also referred to as aggressive selling, or in the case of buying respectively, aggressive buying. Please note that the concept applies vice versa, both for buying and selling. Consequently, let's look at limit orders. Limit orders instruct the broker to buy or sell a security at or above or below a certain price. These orders ensure that the buyer or seller pays a specific or better price for a certain asset. It is important to note down that buy limit orders are placed below current price and sell limit orders are placed above current price. Please also note that limit orders are subject to slippage and therefore are not guaranteed to be filled, as price may simply skip a limit order, but more to that later on. Next on, we have stop orders. These refer to a brokerage selling or buying an asset when it reaches a specific price below or above the current price. Stop orders are most commonly associated with stop-loss orders. These are essentially a buy or sell stops depending on direction. Please note that buy stop orders are placed above the current price. This means if you, for example, sold an asset at a current price, your stop loss or buy stop will be anywhere above that price. In case of a buy, sell stop orders are placed below the current price, which would act as a stop loss order for an open buy order, for example. Further to these types of orders, there are also other orders which are not that commonly seen in the Forex market. Let's have a look at GTC, IOC, AON, and FOK orders. Good till cancelled, or GTC, are pending orders that would remain in effect until they get either filled or manually cancelled. For example, by the end of the trading day, if an order does not get filled, the trader would have to cancel it. Immediate or cancel orders are pending orders that are active only for a few seconds. These ones get cancelled if they do not get filled immediately. All or none or AON orders specify the volume or size of the order to be filled, restricting it to go through if it would only be partially filled. For example, if I want to buy 10,000 contracts, but only 5,700 could get filled at the requested price, in this scenario, the order will not be executed unless all 10,000 contracts get filled. Fill or kill, or FOK orders, are a combination of an AON and an IOC order. They either get completely all filled immediately or cancels the order if all of it cannot be filled immediately. Please note that these orders are not that commonly used by retail traders, as the orders of retail traders almost always get filled immediately. If you have enjoyed this Forex related content, please do not forget to like and subscribe. Also comment below on what you would like to see next.